Welcome to this special edition of the Economy and Politics Show, where we discuss key insights from Proshare Research's table. I'm Ottoabasi, Abasiekong. Today's conversation is focused on Nigeria's windfall tax, moving beyond concerns to governance, a recent analyst note published by Proshare, which took a deeper look at the policy, reactions, and implementation realities. This report looks at all the issues presented by the different schools of thought in detail and raises a number of issues, even as it reasoned that the payments will have to be made as a consequence of legislation. Joining me in the studio to have a robust discussion on the windfall levy are Mr. Teslim Shitta-Bey, Director and Chief Economist, Ademidun Shogo, Corporate Analyst, and Mr. Terver Audu, Macro-economist, all from Proshare. You're all welcome to this program.
Thank you for having us.
Thank you.
Thank you.
Nice to have you all. Let me begin with this quote from the analyst notes. Windfall taxes are generally socioeconomic balancing acts rather than avenues for revenue mongering. So, Mr. Teslim, I would like you to elaborate on this in your notes' larger message.
I'm happy also that you actually started with this quote. Yeah. One of the things we've seen in Nigeria is an aggressive approach towards revenue generation. Everything is about revenue generation. Everything is about trying to block those gaps in our budget deficit. And what we are saying is this: taxes are also used as instruments of social engineering. And so it's not just about revenue, it's also about providing incentives for the productive sectors of the economy to grow. Now, the thing is, for us in Proshare, it's about you have to create the environment for revenue development. Then you can tax that. So you want to stimulate economic activity. Once you've stimulated the economic activity, revenues grow. And once revenues grow, they become taxable. We're saying that the government needs to focus more on how to stimulate growth in the economy. And then the profits that come from that stimulation can be taxed. So it's rather than just looking at the windfall tax as an opportunity to just grab revenue. That's what we're talking about when we're talking about revenue mongering. We're talking about, it's not just about a dash and grab. It's about how do we help that sector to grow better, to be able to increase the amount of credit to the private sector, and therefore on a public-private sector partnership basis, everybody's a winner. It's a win-win situation. The tax stimulates economic growth that we concentrate, and we'll go into this in detail later because it's a very important point. But I think I should just stop there for now.
Ade, the analyst notes drew parallel and identified differences in the fundamental understanding of and interpretations around windfall levies. Could you explain these distinctions and the principles around gains and losses as you alluded to in your note from pages 3 to 5? Why is this unique? Is it equitable?
Okay, thank you very much. So let me start with the definition of windfall tax. We have windfall tax are taxes implemented on, we have sectors or we have companies that perceive to have supernormal profits. And they're mostly linked to economic conditions. So if there's a change in economic conditions that makes some sectors to make humongous profits, significant profits, so the government comes in place to tax them and redistribute it to other sectors or even use it for social welfare. So we've seen it happen globally, especially since the COVID-19. There's been a significant rise in the windfall tax levy made by countries. We saw the recent one in Italy. It was levied on, we have the oil companies. We have given to them and it was redistributed to the citizens. We saw one also levied on the banks itself. However, there's a distinction about Nigerians on. We have the reason is because we're levying it on the FX gains. We have globally, we've really not seen, we have windfall tax done on FX gains itself. That's the exchange rate component. And I think the reason for that is because we have exchange rate is not static. There's always a reversal of what happened. So we're seeing a depreciation now, that could be an appreciation now. And another thing that relates to why Nigeria is actually different is that we have the fund itself is going to be debited by only the bank. Only the banking sector is going to be given to the banking sector. It's legal, yes, but there are still concerns about what are they going to use this money for? So you are moving the money from the private sector to the federal government. We have the funds is not being redistributed back to the citizen, as we've seen in global climes. So those are the questions that are being raised about it. Those are the distinctions about it. It's legal. People have alluded to that it's legal for them to deduct that. But there are questions about the fact, if we see a counter cyclical movement of the exchange rate, what are we going to use to shove that position? We have the questions about the accountability and the applications and the allocations of those funds. Will it be well used based on the historical performance of the government itself, that's fiscal harm, in using funds, in managing resources? We've seen that there's a trajectory in terms of low performance of managing resources, and that creates concerns because we know that the private sector tend to have used their resources. It is more goal-oriented because we know that shareholders' funds that are in place they need to be accountable to. Exactly. So those are some of the concerns about it. And there are different school of thought. I think we're going to discuss that further.
From a macroeconomic position, kindly provide insight into the gains and pains of the windfall tax regarding the allocation and implications for the banking sector and the economy. Terver, I would like you to have your take on this.
Well, basically, the government would use what would call the tools of fiscal and monetary policy to regulate the economy. So the taxes generally come through the fiscal policies, just stands among the fiscal policy tools that the government use. So before the whole issue of windfall tax started, we used to have this belief that whenever an economy was on a downward trajectory, every economic agent was also at a very low ebb level when it comes to their income. Where there were shocks in the economy, and those shocks made people to make some gains, then everybody made gains. If the shocks caused people to go down, then everybody. However, this thought process was, disrupted, especially during the COVID era, during the Russia-Ukraine war, and even in Nigeria, where we had some certain levels of shocks, and then some people were able to make massive gains, and others were not. So it disrupted the conventional belief. So what the government decided to do was simply to, tax areas of surplus and then move it to areas where there was some sort of deficits. So this tax in itself, perhaps when you look at it from the macroeconomic perspective, might want to really look into issues of inequality in terms of income distribution. Taking this tax from the banks might also have implications for financial stability, and we know the role that the financial sector plays in terms of the overall workings of the economy. So you take away this tax, which you've said, okay, don't use it for, in the case of Nigeria, don't use it for the revaluation gains you make, don't use it for dividends, don't use it for your operations or anything. This tax would have been used to buffer up the loan to deposit ratio of these banks, could have been used to support the banks in times of shocks, counter those shocks that might be unforeseen or risks that might come in the future to affect financial system stability. So if we then take away this, it's going to really have very dire consequences. And then of recent times, we've seen that the countries such as Lithuania, several banking sector players such as the Swedbank and the SEBs of Lithuania, they've come out to actually talk against this tax. The IMFs themselves, which are regulatory bodies, have actually said that the tax in itself might not assist or help financial system stability and do not actually serve as very good alternatives or substitute for revenue raising policies through tax. So it has very high level of implication on the financial system stability, and the financial system stability, which plays a crucial role in the economy, if affected, might just lead us to what we call a FinCris, which is financial crisis.
As a follow-up, Terver, as credible as it appears, the argument could be shattered if the windfall tax discourages economic agents from acting in ways that lead to economic expansion or introduce creative reporting if ambiguities alluded to in the note remain unresolved. I'd like you to give further insights to this.
Yeah, like you've noted, it sounds credible, but the extent to its credibility might be questionable because there are a lot of question marks. Economic agents might also tend to react if this policy comes in place. Its credibility simply boils down to the fact that we want to use this tax to achieve a redistribution of income to support, areas of deficit in the economy. It's a source of revenue for the government, which of course need to meet very crucial obligations. But then, if this tax comes in place and it affects financial system stability, the banks and other financial institutions will be negatively affected. This tax creates instability or has the potential to create some form of volatility for the macroeconomy if not sequenced properly. Okay, in economies such as Italy, we might say, okay, it was so rosy. Italy had a target of what you wanted to generate and generated above that. But there were some underlying challenges, like issues relating to the tax base interpretation, were not quickly looked into, and businesses were exploited, businesses had to leave, and so economic agents might tend to leave, and that's what we call problems of corporate relocations. So I believe that Nigeria would have been in a better position to set its macroeconomic in a way that is business friendly, attractive, such that if businesses are leaving other economies and trying to explore options or places to relocate to, we would be part of the people to benefit from those spillovers or corporate relocations. But then creating such conditions of volatility, unpredictability in our economy, it's some form of disruptions, and economic agents might not react to it so favorably. Households, on the other hand, we need to look at their reactions when households do not have a very large extent of confidence in the government. What then is going to make them believe that this little amount of money you're going to generate from this disruptive tax, you're going to use it to implement effectively this time? The larger portion you've had before, what have you used it for? So if there is some failure of being able to apply this tax effectively this time, it's going to increase the extent to which households' level of confidence even falls further deeper in a hole.
Now, Mr. Teslim, I have 3 issues arising from the position taken in the report from pages 4 to 6 that said Nigeria takes steps to address its current economic challenges. It will help if it can move from an ad hoc, an opportunistic approach and adopt a whole of society and whole of government approach that will allow the country use its tax policy reforms as a productive incentive. So these are the 3 issues I'd like you to look at. What do you mean by this in a specific sense? What are the fiscal implications of the budget 2024 adjustments with the windfall tax inclusion? And why has the government not acted on the Taiwo Irele-led Presidential Committee on Fiscal Policy and Tax Reforms report and recommendations, looking at it as a product of an extensive consultation and subject expert insights?
Okay, thank you very much. Maybe I should leapfrog backwards slightly, taking it up from what Ade had said earlier, right? She had clearly made the point that windfall taxes are not new. They exist in places like the Czech Republic. We've seen it in Hungary. We've seen it in the UK, and we've seen it in Italy. Now, it's important that we also understand that windfall taxes have primarily been charged on product sales. So when you look at the UK, we're looking at a product, right? We're looking at oil and gas, right? And when you look at the other economies too, it's actually products that are taxed. Now, what in economics you do is this: you look at it and say, okay, producers have made so much money. And that means that there's a large producer surplus, and then there's a shrinking consumer surplus. To ensure social stability and balance, the government says, you know what? We can't allow so much distance between the producers and the consumers in terms of benefits from this hike in price. So why don't we balance things out? So we take a little bit from the producers and say, yes, give it back to the consumers. That's what we call a win-win. The producers obviously gain from the higher prices, but the consumers also gain from the chargeback that is given to them as a result of those higher prices. So you keep society in some sense, with some sense of balance, okay? And so that's what usually happens. Now, what happened in Italy, like Terver said correctly, was that they decided that, okay, windfall tax should be applied to the financial service sector. However, unlike Nigeria, where we've decided to take the money and put it into some kind of federation account where it will be distributed for projects and things, what Italy decided to do is that, you know what, banks, you made this windfall tax, you had this windfall revenue gain, but we're going to tax it. Now, if you don't want us to tax it, you have the option of bringing it back as part of your tier 1 capital. So what happened was that you strengthened the banking system, because Terver was talking about that volatility, the financial system stability. So you strengthen the banking system by saying, okay, this bank A, you made so much in terms of windfall gains. You can't spend that money. You're taking that money and you're putting it back as part of your tier 1 capital. That is basic share capital. You're putting it back there. Now, what does that do? Terver has rightly pointed out. First and foremost, your capital adequacy ratio improves sizably. Your cost of funds will reduce because you now have a higher credit rating. So your cost of funds reduce. Now that reduction in the cost of funds can now be passed on to borrowers. So you see that borrowers can now say that, oh, okay, fine, it's going to cost us less to actually borrow from them. And then maybe we wanted to actually expand. This might be the right time to expand. That's why we talked about expansion, creating things, using the tax as an incentive. Okay? Look at it. First, the threat of a tax, not the tax itself, is the incentive. But we've given you this money back to put back into your business and grow your business and grow other people's businesses. Because as Terver said, the financial services sector is crucial to broad macroeconomic expansion. So we've got to treat it gingerly. And so if we strengthen bank capital, then it becomes a greater proposition for government to say that, you know, we've strengthened your bank capital through this thing. Grow your loans and advances. Now, when you grow your loans and advances, your profit after tax should increase. Then, so what we'll now do is that your profit before tax also increases. So we tax your increased profit. And it is from that tax you get from the increased profit, you can now say, okay, we will now deploy for health, education, and critical sectors of the economy. But you've grown the financial services sector, who have grown other sectors. So there's a multiplier effect that ripples through the economy. So that, for me, is one of the opportunities that the threat of a windfall tax could create. Yeah, so coming back to your question, and in relation to what I just said, we're looking at the social, the whole of government and the whole of society approach. Now, interestingly, as Ade was talking, I realized that even amongst the banking system itself, there are different thoughts concerning the windfall tax. Because we've seen chairmen of banks say that they're fully in support of the tax. They've given a nod to the tax. The Bank Directors Association actually kept quiet until the tax moved from 50% to 70%. And then they say, come, yes, slow down here. There's some challenge here, you know, because actually it is money that the banks could have kept within the system to grow their credit base, right? And so you're taking that out, and you are with not it's discretionary how you use that money. You talked about one very important concept, the trust deficit. There's a massive trust deficit, especially in emerging markets, not just Nigeria. In emerging markets, citizens have protested about government approaches, government's impact on their day-to-day life. You've seen it across the world, okay? And we've seen those protests. And we recently just had one in Nigeria. Yes. So we're saying that, look, it is important that government needs to generate more revenue. However, there must be a greater social consensus to the type of revenue you're generating and the time of the revenue and the application of that revenue. You've put in a federal committee led by Mr. Taiwo Oyedele, and you've told him, go ahead and harmonize the taxes to make the environment tax-friendly. But within that period of time, you've also introduced a tax that I'm not too sure was considered within the context of the Oyedele report, because he put all the taxes into 9 headings. Right, so where was the windfall tax there? You know, where does it show up there? So it is important that there's broad social consensus through consultation. Before you implement some of these policies, there should be broader consultation across various society segments. Okay, so that's why we're talking about the whole of society. The labor unions should have looked at it. The civil society groups should have looked at it. And everybody comes together and say, oh, look, this is nice. All stakeholders come to look at it. Yes, shareholders, stakeholders, and we all say, oh, this is going to affect us. Because like you said, shareholders, that money could have also gone to dividends. Exciting investors in the kind of returns they could have made in the financial services. Now, Proshare also, as you know, as part of engagement with the broader society, we've also said we want to see a whole of government approach. Because what we're seeing is one arm of government does one thing that contradicts what another arm of government does, or one arm of government is doing one thing that duplicates what another arm of government is doing. That cannot take us to where we want to get to in terms of macroeconomic and social development. We need to have everybody at the table. Everybody within government must see how the dominoes fall. How this policy will link to this person's, will link to this institution, will link to this other policy. And so there's a comprehensive whole of government approach to policies. And that's the argument we've made. We said, for instance, this is a clear case where there are divergent opinions about the windfall tax because there was, one, a lack of proper consultation when it was taking place, and two, a lack of whole of government approach to it. So other people, the FIRS could make its own opinion, the bankers could make their own opinion, shareholders could bring their own opinion to the table and say, okay, you know what, let's come to a compromise. We're going to do this tax, definitely. But we've decided that it's going to be a 30% tax, or it's going to be a 40% tax. So you will also have benefits because the 60% others can go to wherever the banks want to use it. Part of it goes to dividends to investors, encouraging capital market growth. Part of it will also go to loans and advances, which will also stimulate growth. So that's why we said it should be an incentive. These taxes should be an incentive. And it will only get to that point where you're seeing that there's a whole of society and a whole of government approach towards policy. If you look at the report, you find out that we did a comparative analysis of different countries. And we saw that virtually every country that targeted certain revenue streams from windfall tax never got to that point where they achieved those revenues. They all fell short of those revenues, except when Terver talked about Italy. But we've seen the Italy example, that it was seen as an incentive. So it was a disincentive tax for you to go and start spending the money recklessly. But we provided you with the option that if you don't go in this direction, we will allow you to use it to show up your capital. Showing up your capital will allow you to expand your loans and advances. Expanding your loans and advances allows you to increase your profit before tax. When you increase your profit before tax, you make a lot of money in additional tax revenue. So it was only Italy that was able to do that. So that's why I'm saying that. So we've got to be very clear in our heads what the end game is. You know, when you look at the guys who do windfall taxes on products, it's a zero-sum game. You know, there's a zero-sum game advantage. Why? We're making a lot of money. I'm giving you part of the money, and I'm giving the consumer part of the money. So the consumer is happy, the producer is happy. When it's tax on financial services, FX in particular, you have a bit of a challenge here. There's a twist. Because don't forget, as the banks are making FX gains, I don't want to mention some large, fast-moving consumer goods country that have made huge losses. These are companies that have historically been very profitable, made profits in the billions, and returned huge amounts of money to shareholders by way of dividends. This last year, they made massive losses, principally because of the challenges they had with foreign exchange management. They made huge foreign. So the other side of the gain in the financial services sector is a loss in the real sector of the economy. So do we compensate those who made losses? Because that is the issue of the zero-sum game. When you look at products, there's a zero-sum advantage in the sense that everybody gets something off the table. So it's a win-win. However, in this instance of FX, translation gains and losses, the financial services sector makes gains, the real sector makes losses. So what that means is that what you might gain from the financial services sector, you lose from taxing the real sector of the economy. Because those FMCGs, they can't pay taxes on losses now. Yeah. So That's why I said we need to carefully design policies, craft it carefully to ensure that society is in that win-win cycle.
Now, in looking at the views from experts, professionals, analysts, and stakeholders on the windfall tax, as legislated, which is contained in page 9 of the analyst note, where do we see convergence, and how did you try to reconcile the different school of thoughts captured by the note?
Okay, so there were 3 broadly school of thoughts. We had the people that are pro-tax, and those are the people that they felt like, yes, it's justifiable for them to tax and redistribute the gains made by these banks. Then we had the bankers school of thoughts. Those are people, most of them were mixed. We have some believe that, yes, taxing them 70% was fair. But there were concerns. Some were not in full support. So the concerns was about the ambiguity of the tax itself, then the non-engagement with stakeholders. So I think Ms. Teslim has actually said something about the fact that there was not a uniform consensus, there was not stakeholder meeting, there was not alignment. There were no meetings held before the policies were made that would know if there was actually a consensus about it. So those are some of the concerns they raised. They also talked about the allocation of the fund itself. And I think that itself is a question that everybody is trying to find answers to. There are questions we raised in the article, and part of the questions is that what percentage of each of there are 5 different objectives that the government tends to achieve with this. This supposed 3.37 trillion they want to raise. So we said they want to do infrastructural, like some of the infrastructural gap, they want to fill it up. That has to do with the health sectors. We have the education sectors and so many other things. They said they want to do some social interventions. So that's cash transfers to household. So based on that, there are questions about the allocations. There's also a third school of thought, that's the alternative. And those are the people that were not in full support of the policy itself. They raised questions about the allocations, they raised questions about the accountability, they raised questions about tracking the process of this funds itself. And they raised questions about the budgetary allocation, because primarily there's a budgetary allocation for each of the objectives they want to. So what have they done so far with the initial budgetary allocation? Then these additional ones, how do they intend to justify it? Then how can the public actually track the process of this? So I think it raises more questions. Then it also raises question about the CBN itself. This FX revaluation gain was actually kept for a counter cyclical exchange rate movement. So in case we see an appreciation of the exchange rate, they have less than 20% to actually shove up their position. Will the CBN be able to provide them extra money in case there's an appreciation of the currency? Or then it also raises further question about the expectation of the Naira. So they extended the period from just 2023 to 2025. Do we expect the Naira to continue to depreciate to 2025? So is that a policy direction that people should implement into their decision making and ethics management? So I think it's more of a question. And the consensus from the school of thought is that there's still concerns about it. The major consensus I can pick from it is that people are they're unclear about what they're going to use the money for. So aside from you taxing them, there's still a larger percentage of the school of thought tends to agree about taxing the money and redistributing it. But they're so bothered about the movement from the private to the federal sector. So there's an historical pattern when it comes to management of resources from the federal arm. We are all aware of it. We've seen our fiscal deficits rise so much. We've seen a lot of lack of accountability about projects. We've seen the lapses of projects over the years. So those are the questions that people are raising about the money itself, not about the taxing of the money.
Let me get your closing thoughts on this analyst note. Very interesting conversation. I'm beginning with you, Mr. Teslim, as the viewers would love to know the key takeaways from the position taken by Proshare on the windfall tax.
Key takeaways. Ade has alluded to it, right? We believe that windfall taxes are not new. They have been done globally. However, what is important is how those tax revenues are governed. That's why we titled it From Concern to Governance. It's about how are these revenues governed? What structure has been put in place, especially in a society that has a trust deficit? We need to seek transparency. Thankfully, the bankers themselves are not adverse to the tax. However, as Ade has rightly pointed out, what is critical is what are the structures around how this tax, how am I sure that the money that you've taken from me as a banker is applied to activities that will enhance my business? Because don't forget, we started off from saying the government must use tax as an incentive. We've seen that work when you look at what happened with our infrastructure development, and we gave tax credits to certain large corporations. Yes, and they've done their part, and we've seen that happen, right? So it was an incentive. So if we can do it in the real sector, we should do it in the financial services sector too, for social equity, which we stand for. We stand for social equity. We've got to say that, yes, okay, fine, you've taxed you've made these taxes proper and prim. Don't forget, it's an act. Section 30, the Financial Act, Section 30, 31, and 32 clearly states that. So nobody has any issue about whether there should be a tax or not. We've gone beyond that point. It's a law. So yes, there is a tax. But how do you spend my tax naira? That structure around it, we are insisting in our report, is crucial. Government needs to come out and explain. You can't just say we're doing cash transfers, like Ade said. So how much of this tax goes into tax transfers? How much goes into infrastructure? How much goes into healthcare? How much goes into education? What exactly are you doing in those areas? What mechanisms are you putting in place to ensure that once those monies go in, they actually result into the outcomes we all desire? Once that is done, I don't think there'll be too much of a debate there. But it does also speak back to what we have said earlier, that the government requires a whole of society and a whole of government approach to policy, so that we don't get into this huge debate again when the next tax comes along. Perhaps when Tayo Oyedele's committee's tax structures have been approved and so certain new taxes are introduced and others are scrapped. We need clarity. We need to know how our tax naira is spent. And then if we can achieve that, you're going to see a greater trust in the governance of the country. And that's what we are for, that the government needs to build trust in the citizens, so that when the citizens are paying money, they are confident that the money will go to activities that will benefit them. Because ultimately, the whole purpose of the government is to benefit its citizens.
Yes, and Terver?
Basically, in trying to solve a problem, we shouldn't create more problems for ourselves. So if there's already, the economy is already in a volatile state and we bring about certain policies, if it's something that is going to cause larger disruptions than solve, or create solutions for us to restore what the CBN has always called for, which is stability, then we need to tread cautiously. That is one. And then we also need, it's very important, the issues of relating to implementation. Implementation has been a very, very huge challenge when government policies have, looking at government policies over the years, even budget, you could just ask yourself this question. We've allocated very large sums of monies to a lot of projects over the years that, we couldn't even account for. Now we want to raise 3.37 trillion naira from a windfall tax. How sure are we that this is going to be adequately, effectively, and efficiently done?
Ade, what's your closing thoughts?
We have trust deficit in the country. So if they efficiently use these funds as we want, as the citizen wants, and it's visible, the evidence is being seen, I think it will somewhat help in terms of confidence and also reduce the uncertainty about the country.
So thank you very much for this very, very insightful conversation and perspectives that you brought to this analyst note, Nigeria's windfall tax, moving from concerns to governance. Very, very robust conversations. And I must thank you, Mr. Teslim Shitta-Bey, Director and Chief Economist, Terver Audu, Macro-economist, and Ademidun Shogo, Corporate Analyst, all from Proshare, for being part of this conversation. Thank you once again.
Thank you.
Thank you.
To our viewers, this has been an interesting edition and a robust conversation, and its concluding thoughts, which re-echo the analyst note that the market must move quickly to resolve the payment issues and take on the bigger challenge of building bridges to resolve the crisis of confidence in the economy. If you want further insights on this conversation and the analyst note published on windfall tax, visit our website as displayed on the screen and follow our social media platforms to engage further with this show. Until we come your way again, enrich yourself with knowledge of socioeconomic developments around you. It is wise. I'm Ottoabasi. Thank you for watching and bye for now.